Hey guys, Kevin Bupp here, and I want to welcome you to another episode of the Real Estate Investing for Cash Flow podcast. Our mission is to help you build and maintain massive amounts of cash flow through income producing real estate investments. And our guest for this week's show is real estate attorney Brian Boyd. Now, Brian is the owner and managing attorney of the real estate and tax firm Boyd and Wills. Brian specifically advises clients on multifamily and commercial real estate, including syndications and all their tax and legal implications. He is also the author of the new book, Replace Your Income, A Lawyer's Guide to Finding, Funding, and Managing Real Estate Investments. And so, guys, I'm excited to get on to the show with Brian. But before we do, just have a few quick housekeeping items to run through. As I've mentioned here in the last couple of shows, recently released my own book called The Cash Flow Investor, How to Create Financial Freedom Investing in Commercial Real Estate. Released it back in April. It's up for sale on Amazon. It's been on the best-selling list. And I recently made a free version available for my listeners here. So you guys, if you'd like to go download a free copy of that book, over to kevinbupp.com/free book. Again, that's kevinbupp.com/free book. Moving on here, guys, if you're an accredited investor and you have an interest in partnering with me and my team, head over to investwithsunrise.com and you can learn about not just the stout pipeline that we have. I just got back from Milwaukee yesterday. We've got a phenomenal opportunity up there that I've been working on for a number of months. And our pipeline is just hot right now. We've got some incredible off-market opportunities that are in the works, but also have a number of deals in contract. But more important than that, our current offering, which is SEI Growth and Income Fund 3, currently has over $20 million of sweat equity that we built since its inception. And so this opportunity is limited to get in a de-risked manner to our current offering with the existing deals that we have in place, but also some incredible deals that are coming into the hopper. And so again, if you want to learn more about investing in deals that are already cash flowing and providing quarterly distributions, head on over to investwithsunrise.com. And just one last final note there. 2022. So it's, the end of 2022 is coming really, really fast. And this is the last year that you'll be able to get 100% of the bonus depreciation benefits before this incentive starts scaling back. And so again, go over to investwithsunrise.com to learn more. And now with that, guys, let's welcome our guest for today's show, Brian Boyd. Brian, how you doing today?
I'm doing well, Kevin. Thanks for having me today.
Yeah, excited to have you here. And just give our sensors a sense of geography. Where are we talking to you at today? Where are you based out of?
Right now, I'm in Mexico. It is my wife and I's 10th wedding anniversary this week. So we are down here with our son while he's on fall break from school. But I work out of Nashville, Tennessee. Mm-hmm. I live in Franklin, Tennessee, and I work out of the Nashville market. So that's where I am most days, every day is in Nashville.
All right. Well, thank you for taking time out of your vacation. And hopefully we won't keep you too long. We'll let you get back to your family there. So with all that being said, Brian, what I'd love for you to do is, I'll give you a very brief introduction there, but maybe take a few minutes and tell us a little more about yourself, your background, and what it is you do.
Absolutely. So I went to law school late in life, and I say late, I was 25. I had done college, I did a few years of business school after college, and then decided to matriculate to law school right about the time 9/11 happened. So my first year of law school was 2001. The planes hit the towers, and it kind of changed my outlook on a lot of things. I decided, I'm spending all this money. I don't really want to go and work in a courtroom. What can I do? So after law school, I went back to law school and I got a second law degree in tax. And I ended up working in the market of Washington, D.C. for one of the big four, and learned a lot, saw a lot, was able to put all my legal education together, and then made my way back to Tennessee, where I'm from originally. And just in time for the market to fall apart in 2007, 8, 9, and 10. Found myself without a job and was just kind of struggling to make it, and went out on my own and picked up a few clients that are real estate developers, contractors. Mm-hmm. And one in particular had a very unique model. He would build 10 homes, all connected. So they all shared a common wall, at least one. He would sell 7, keep 3, and do a cash out refi. And this was back in 2010 when a lot of people weren't really doing this. Mm-hmm. So I started taking his model and overlaying, well, if you did this, you tweak this, you took this, and get into cost segregation studies and accelerated depreciation. And I'm like, wow, you could really run a massive tax loss, but you're cash positive. And kept trying to get my wife to do that. And she didn't want to do it. So in 2016, I built a coin operated laundry. held that for a year. We got massive tax benefits from it, and I sold it a year later. And from that sale, I did four things. I paid off a student loan. I bought my wife a new wedding ring. I bought a couple of shotguns to go hunting with, and I bought her first short-term rental. And it was at this time that she started seeing from the short-term rental the depreciation hitting our Schedule C, and providing those tax benefits I'd been telling her about. Even though I'm a tax attorney by education, she didn't believe it until she saw our accountant do it. So that led to us purchasing two more single family homes. Then we sold the short term a year later, bought 13 single family homes with the profits from that. And we are off to the races. Now we have three short term rentals. We just sold two properties last week. We are reinvesting that into a $2 million build north of Nashville. And we have, for all intents and purposes, replaced her income from a gross number, but not from a net number. So we self-manage most of our long-term rentals, but we don't manage our short-term rentals. One's in Montana and two are up in Gatlinburg. And so that's our story. And now this book came about because I'm having the same conversations with people that are interested in real estate. They're asking me all these questions. And it started out with me just writing them all down in an FAQ and meeting with people. I'm like, hey, here are the questions most people ask me. If there's something on here you want to talk about, let's talk about it. That in turn led to me doing a bi-monthly blog writing session for the Joe Fairless podcast and his blog, which in turn resulted in me fleshing those out and creating a book out of it. So it's a lot cheaper to buy the book than it is to hire me for an hour. But that's the point of that, is that real estate is so powerful. And it took me, having to prove to my wife, this works, this really works. And now she's all on board. She's the face of the company. She talks to all the tenants. She deals with all the vendors, and she is in whole hog. She loves it. And this is what she wants to do for the rest of her life.
Well, that's fantastic. I appreciate you providing that background there. And what I want to back up a little bit, and one of your first clients was the developer that was building, build 10 units, all shared walls, and then sell 7, keep 3 of them. And that's really what garnered your initial interest in the real estate space, investment space. And ultimately, at that point in time, you tried to sell your wife on, all the different benefits associated with investing in real estate, but she wasn't on board. And so, going back in time now, knowing what you know today, the reason why I want to bring this up and I want to hit on this point is that a lot of folks that might be listening might be in the same predicament. Maybe it's the husband trying to sell his wife or the wife trying to sell the husband on the merits of owning real estate investments, and for the many different advantages that come with it. What should that sale, what went wrong with your sales pitch back then, and what would you have done differently to get her on board?
My wife is so conservative when it comes to being a risk taker. She's very risk adverse. And I've been a serial entrepreneur for, I can't remember how long now. I sold a company in 2008. I lost my job at a law firm and had to go out and strike it out on my own. And I was trying to explain from a lawyer's perspective how this works to my wife. And I'm not a salesman by nature. I look at facts and I look at documents and I look at structures. And I think I was just saying it wrong to her because one of my clients handed her Rich Dad, Poor Dad. And I remember the night she did this. We're lying in bed. I'm watching TV. She's reading Rich Dad, Poor Dad. And she goes, "Did you know you could write this off?" I'm like, "Yes." And she's like, "Did you know that our cell phone bill, if we use our cell phones for work, it's deductible?" I'm like, "Yes." And so thanks to that client who I'm now partnering with, but at the same time, like, I've got all this education. I tell people this for a living. Why don't you believe me? I'm your husband. So I think what I would have done different is probably just purchased a small duplex back then and shown her how it would have worked. I would have gone in without her, because back then in the market, we're talking 2011, 10, it was still relatively cheap. You could get in, make good cash on those properties, and just shown her, because she didn't, like I said, she didn't believe it until she saw the tax return.
Yeah, it's
I'm
interesting
like,
how most people perceive risk, because in her mind, you mentioned she's conservative and very risk adverse, and but on the flip side of that, my perception of risk is keeping my money in the market or my 401k and letting someone else try to choose my destiny of how my money works for me and not me having sole control of it myself. Right? I feel that it's way less risky to actually own investment property than it is to have my money in the many other ways that people look to get return on their investment. And so I feel like real estate is one of the least risky investment classes to be in. So, but again, it's just all perception, right? It's all how we've mostly been trained, with informal education realm, and like it is the norm for most people. And so it's entrepreneurs are kind of the oddballs, and I do think that's shifting a little bit. I think the tides are shifting, and I think that it's becoming more mainstream. This education, this knowledge, but not mainstream enough. Again, you're out there, preaching the benefits. I'm always out there preaching the benefits, but it still takes some time to get most folks on board, especially those that are just uber conservative. So, but I'm glad that you're able to bridge that gap.
well, I'm really glad you say things like being risk adverse is a perception thing, because I have gotten my wife to the point where she's starting to look at equity and thinking, how can we deploy that equity?
Mm-hmm.
How can we get that out into the market and not necessarily into the stock market? I know you've watched the stock market lately, and it's been a wild ride. But my real estate investments, those tenants are still paying their rent every month, and those properties are still valuable. And that's not going down. Rents
Mm-hmm.
aren't going to go down. I mean, if you remember 2008, 9, and 10, I don't remember having a landlord that said, you know what, I'm going to cut your rent this month. It didn't happen. It's not going to happen. And so now she's starting to understand that if we can control our own equity and deploy that, we can scale. And by scaling, we are creating a safer base for our investment.
Mm-hmm.
And she's finally thinking about it. And it is a shift in the paradigm of how somebody perceives risk. We're all taught, like you said, to think of, hey, you go get a job, you work 40 years, you get a 401k, and then you retire. That's not the case
Mm-hmm.
anymore. I'd like to be retired, the next 10 years and only doing real estate deals.
Yeah.
And I think she's starting to see, hey, this is possible. Real estate does this.
Yeah. It's interesting. There is one small caveat to what you'd mentioned about, rents don't go down. And I think it's isolated, but I'm going to speak to it anyway. That, I own stuff going through 2008, 2009, and we were in Southwest Florida. And, back then it was a little different than what it is today. There was a massive oversupply in housing that was built. And there was a few markets across the country that did experience that. Florida, many markets in Florida experienced that. Orlando, Tampa, Fort Myers, Miami. I don't think Jacksonville was really factored in there, but Las Vegas, Phoenix, Arizona, and
I remember that.
a number of markets in California. And I will say there was a period of time for about 2 years, only due to an oversupply and ultimately just too much on the market, and so incentives and concessions had to be made from landlords in order to attract 10 properties fighting for 8 tenants, right? So, but
that's correct.
I would say that's an anomaly, and we are not in that situation today. We're in fact the complete opposite end of that spectrum, and we have a massive shortage. And so that's really what's been driving rents, to just extreme, double-digit increases year after year over the last couple of years. So again, very, very different scenario today than what it was back then. But I figured I'd point that out. But I do think it's isolated and it's an anomaly. With that being said, I want to make sure we don't go. There's a kind of a part of your progression that you made mention of, and it wasn't the first real estate investment, but it was a coin laundry, I think is what you mentioned. Tell us a little more about that. I love niches. I know,
Right.
and I don't know if you own the real estate portion of it, but I did a series years back now where I brought on, I don't know how many experts. There was probably 5 or 6 different coin laundry experts I brought on the show. Some owned like 3 or 4, and some there was a guy interviewed who owned like 60 of them, right? Like, had a big scale business, and it's a unique niche. It's not mainstream at all. And so I'd love to hear kind of what took you to that space, what attracted you there, your experience with it, and just some of the background, if you would.
Yeah, absolutely. So I was out turkey hunting with a buddy, and he actually builds coin laundries. That's his job. And he has 3 of his own. I think his brother has 2 now, and he actually sells the equipment, so the laundry
Mhm.
units themselves, and then he'll go build it out for you. And we were talking about passive income because as a lawyer, I bill by the hour. So
Mhm.
I can only bill so many hours in a day, so many hours in a week, so many hours in a year. And then my income is capped. It's not going to get any bigger unless I start
Mhm.
scaling and bringing more people in, which costs more money, and you have to have clients paying for that. So I started thinking about coin laundries, self-serve, car washes, something that would work while I wasn't working, something that would provide that additional cash flow that would allow me to take a day off here or a day off
Mhm.
there. And that year, 2015, I think I worked 48 Saturdays out of 52.
Oh boy.
And so I was miserable. And we were out walking, and I started asking him about the laundry equipment. I'm like, well, can you depreciate it? What is the depreciation schedule on that? And what are you making? And let's look at the demographics. So, I went all in. I liquidated my retirement fund. I took the 10 and 10 penalty, and I went all in. And this kind of freaked my wife out because, like I said, she's very conservative. She's like, that's all your retirement. I'm like, yes, but I believe in myself. I believe I can do this. And I did it. It just got to the point where I was getting phone calls at 6 o'clock in the morning over a lost quarter. And I'm like, I'll take care of your quarter. Here, I'll turn the machine on remotely for you. But I had an opportunity to sell to somebody that really wanted to buy that particular business. And I knew with that money, this is my chance to get into real estate. Now, if you recall in 2017, Gatlinburg burned. Like there was a big forest fire in Gatlinburg, Tennessee.
Yeah, I don't remember that, but I'm very
So
familiar with Gatlinburg. I'm just not familiar with a large forest fire that they had
yeah,
occurred.
yeah. So we went into what is now I mean, back then we bought that unit for 400,000. That's easily a $1.2 million unit now. And we sold it a year later for a $70,000 profit, took all of our equity back out, and then turned around and went into single family homes in a very different city in Chattanooga, Tennessee. But it was the idea of passive income. It was the idea that I want to build something that is making money while I sleep at night. And that's why the coin laundry was so attractive. Not only that, but you can depreciate that equipment like
Mhm.
that. And it kicked out wonderful tax benefits that year. But that was why I was looking to get into it because I was working myself to death and I needed an alternative to just billing hours every day.
But so give us just a general overview. You didn't own the real estate, so you leased the real estate where you
At
put the
least the
equipment.
real estate.
Okay.
Yes.
And then once how large, how many units did you have? What was your all-in cost to actually build this out? And what did it actually when it was stabilized? What was it, at least grossing on an annual basis? I know you didn't have it that long, and so
Right.
just
So let's see. I spent $115,000 to do the build out. The equipment was another $260,000, and then I self managed it. So I got a security system where I had video cameras and all the things that are necessary. It was open 24/7, and it was grossing about 10 a month. And after I paid rent, paid my note on my equipment, I was clearing about 4, so netting about 4 a
okay,
month,
got it,
which wasn't bad. It wasn't great, but it wasn't bad. And I sold it for, a multiple of EBITDA.
got it, got it. Okay, no, fair enough. And then ultimately, if did you accelerate that depreciation, and then
I
ultimately,
did.
how'd you deal with the recapture then on the
So
flip side?
I'm glad you asked about that. So bonus depreciation or depreciation recapture has to do with adjusted cost basis.
Mhm.
And it's the delta between your basis in an asset and what you sell it for. And that is where the IRS wants to tax you. So um, I was able to, as soon as I sold it, we bought that house in Gatlinburg, which was more than my all in.
Hmm.
So we cost segged that property. When we sold it a year later, we did a 1031 exchange into our
Gotcha.
Chattanooga portfolio. So I was very and acutely aware of depreciation recapture, and I think a lot of people should be. Now, there have been times I have not done 1031 exchanges. I've been willing to say, okay, I bought that for $200,000. I'm going to sell it for 450. I have cost segged it, but I'm going to buy into such a larger dollar amount. My basis is going to be so much larger
Hmm.
that the offset of the new cost seg will wash out the bonus depreciation
Yeah.
recapture or the depreciation recapture.
Yep.
And trying to explain that to people who aren't in real estate kind of gets a little complicated. But basically, I leveraged up so far that when I cost segged, it took care of everything plus some.
Hmm. Yep. No, no, absolutely. I love the strategy. We use it every day.
Yeah, it's very important. It's very important to understand these particular steps. And yeah, it's very important.
So talk to me. You have a lot of real estate clients. We're kind of in unique times right now. One could argue that there are turbulent waters for many different reasons. But at the end of the day, you've got a number of clients that are all in the real estate space, probably many different walks of life. And so, just would love your thoughts, not necessarily your thoughts, but kind of hear what you're hearing, the chatter from your clients as to a few different points. I guess the first one being uh, I think we kind of missed the peak of the market, but now again, as we record this on October 13th, it's now still the time to sell. Like values are still fairly high. They haven't softened that much, especially in really strong markets like in Nashville. They haven't probably softened at all. Same thing goes with Tampa. I mean, maybe
Right.
homes. Speaking of residential, like days on market now is 20 days instead of 1 day. But again, well below average. Pre-COVID times, and so is now the time to sell? If so, why?
I would not sell unless I needed the equity or the cash to go do another deal.
Hmm.
Honestly, that's where I am right now. I'm just looking at this as a buyer's market, and the interest rates that are rising, and inflation that keeps going up. I think there's an inflation report today that inflation is hit another 40-year high, and I don't care about interest rates. As an investor, I'm not looking to buy my primary residence. So I'm looking to go buy another property that's going to pay for itself. And as long as those numbers work, as long as I take into consideration the 7% or the 8% interest rate, which I don't think it would be that, especially given the financing vehicles I'll use. Um, no, I'm not worried about interest rates at all. In fact, I'm like I said prior to this recording, we're getting into a big deal north of town. That's going to be a $2 million build, and if we get charged 7%, okay, we get charged 7%. We're going to refinance out of it when it comes back down, and that's perfectly fine with me. I understand it's the cost of doing business, but I'm not going to sit on the sidelines and not do a deal.
Hmm. No,
And
I agree with you. No, I mean, I think the good thing, the point to really make here is that some other folks they have a different perspective. They've got a little bit more of a fear perspective. Investors, they've kind of stepped to the sidelines. But I truly do believe what you're stating is true in that there's an opportunity for deals, whether it be low interest rate environment or higher interest rate environment. You just got to make sure the economics make sense of the deal once you actually factor in the debt piece of it. And I think the biggest challenge right now is the volatility with the debt and underwriting a property that could be marginally thin to where maybe you underwrote that with a 5% rate at certain terms, and ultimately, if that
yeah,
changes, 45 days thereafter, does it materially impact the deal or change the economics of the deal? It probably does. And so, but with all that being said, I've personally have seen seller expectations start to adjust. We've our deal pipeline was fairly slow in the beginning, first 2 quarters of this year, and has picked up dramatically in the last 3 to 4 months. And so, and it seems as though a lot of sellers that I had a hard time having conversations with prior to are much more open minded to have a realistic conversation and aren't just shooting for the moon because they know that someone inevitably will pay that. And so reality has set in a little bit, and that's a good thing. So, I think there's opportunity there, and it's good that some people are stepping to the sidelines. It just leaves more deals for people like you and I.
I agree with you. I think that characterization is actually very accurate. You're getting seller expectation changed, if not managed a little bit better.
Mhm.
It's no longer take it or leave it. And I'm taking, 5 bids within the next 24 hours. You better bring your highest and best. Now you're starting to get back to what I call pre-COVID levels where people are starting to talk more. There's more negotiation going into a deal. You're not taking things as is. There are concessions. You are having appraisals. You are doing inspections. You are getting concessions on this or on that. And that just has not been the case over the
Yeah,
last few years. And quite frankly, I am glad to see it happen. And if this shakes out a lot of other competitors for people like you and I, great. That just means that's more deals that we can go do.
that's right. That's absolutely right. And so, outside of real estate, outside of coin laundry, outside of real estate and coin laundry,
Sure.
is there anywhere else that you're placing your personal capital? I mean,
Uh,
crypto or the market. I mean, anywhere else that you're putting your money, or is it all in on real estate?
so I would say I am about 98% in on real estate. I have a lot of money in life insurance as well, and we use that for infinite banking.
Hmm.
But other than that, I don't get into crypto. I like having a hard asset that I can go touch and feel, and I can look at it year over year. And whether it's the last few years and see a 20% appreciation rate or a 5% over, I think that's what it was projected to be in 2023 for real estate. I'm still growing that property, and that property is still getting its debt paid for by somebody
Hmm.
else. So I am all in on real estate. Maybe later on I'll go back into the market, but right now, I'm going to strike while the iron's hot and I'm going to keep buying real estate.
No, I love it. I love it. Well, Brian, it's been a lot of fun having you here. I really appreciate you coming on and providing all your valuable insights. And for those that want to learn more about you and your services and what you have to offer, where's the best place to find you?
You can find our law firm at www.boydwills.com. Or if you're looking to read the book that I wrote about all these conversations with
Mhm.
these clients, it is briantboyd.com. The book's available on Amazon. Um, but happy to talk to anybody. Just give us a call. We'll schedule something with you and have a conversation. We want to
Alrighty.
help everybody succeed.
Fantastic. Well, Brian, thanks for joining us here today.
Absolutely, Kevin. It's good seeing you.
Alrighty, guys, that's all we have for this week's show. So until we meet again next week, this is your host, Kevin Butt, wishing you huge success. Take care.